for non-resident investors, apart from being available to domestic investors also. The limit for FPI in corporate bonds, currently at 9% of outstanding stocks, will be increased to 15% of the outstanding stock of corporate bonds. To improve investors' confidence and to expand the scope of credit defaults, we propose to formulate a legislation to be placed soon before this House for laying down a mechanism for netting of financial contracts. The debt-based exchange-traded fund, the ETF, recently floated by the government was a big success. Government proposes to expand this by floating new debt ETF consisting primarily of government securities. This will give retail investors access to government securities as much as giving an attractive investment for pension funds and long-term investors. So to address the liquidity constraints of the NBFCs and the HFCs, this was very much talked about between July and December last year, 2019. Liquidity constraints was very frequently mentioned to us. So to address liquidity constraints of the NBFCs and the housing finance corporations, post the Union Budget 2019-20, the government formulated a partial credit guarantee scheme for the NBFCs. To further the support of providing liquidity, a mechanism would be devised. Government will offer support by guaranteeing securities that are so floated. Infrastructure financing. Government's commitment for investment in infrastructure was reiterated when 103 lakh crore national infrastructure pipeline products were announced. I would also like to inform that about 22,000 crores of rupees has already been provided for infrastructure pipeline on December 31st of Honorable Infrastructure Pipeline. This would cater for equity support to infrastructure finance companies such as the IIFCL and a subsidiary which is of NIIF. So two institutions, IIFCL and the subsidiary of NIIF. They would leverage it as permissible to create financing pipeline of more than 1 lakh crores. This would create a major source of long-term debt financing for infrastructure projects and fulfill a long-awaited requirement. So the IFSC, GIFT City, has the potential to become a center of international finance as well as a center for high-end data processing. Vaults. It already has 19 insurance entities, 40 banking entities. It has also provided for setting up of precious metals, testing laboratories for them, and refining facilities also. With the approval of the regulator, GIFT City would now set up an international bullion exchange in GIFT City IFSC as an additional option for trade by global market participants. This will enable India to enhance its position worldwide, create jobs in India, and will lead to better price discovery of gold, unlocks its. It also gives opportunity for retail investors to participate in the wealth so created. The government now proposes to sell a part of its holding in the LIC by way of initial public offer. Initial public offer. Sir, fiscal management. The 15th Finance Commission. The 15th Finance Commission has given its first report pertaining to financial year 2020-2021. In the spirit of cooperative federalism, I am pleased to announce that we have in substantial measure accepted the recommendation fundamental overall of centrally sponsored schemes and central sector schemes is necessary so that we can align them with emerging social and economic needs and to ensure that scarce public resources are spent optimally. Recently, there has been a debate over transparency and credibility of the projected fiscal numbers. Let me assure the House that the procedure adopted is compliant with the FRBM Act. This is also consistent with the practices hitherto followed. However, for greater clarity, I have enumerated those government debt that are not part of the market borrowing and are used to fund the expenditure at the annex. I'd like to repeat this line, sir. I'd like to repeat this line, sir. For greater clarity, I have enumerated those central government debts that are not part of market borrowing and are used to fund the expenditure at the annex. Servicing of interest and repayment of these debts, servicing financial year 2019-20 are at a level of 26.99 lakh crores and the receipts are estimated at 19.32 lakh crores. We have estimated nominal growth of GDP for the year 2020-21 on the basis of trends available at 10%. Accordingly, we have estimated, sir, let me finish, sir. So we have estimated the nominal growth of GDP for year 2020-21 on the basis of trends available at 10%. Accordingly, receipts for the year 2020-21 are estimated at 22.46 lakh crores. And keeping in mind commitment of the government towards various schemes and the need for improvement of the quality of life, level of expenditure has been kept at 30.42 lakh crores for boosting investment. However, expected tax buoyancy will take time. We estimate a fiscal deficit of 3.8% in RE 2019-20 and 3.5% for BE 2020-2021. This estimation is consistent with the government's abiding commitment to macroeconomic stability, and it comprises of A, 3.3 for year 2019-20 and 3 for the 2020-2021 budget estimate, and B, Section 4.2 of the FRBM Act, which provides for a trigger mechanism for a deviation from the estimated fiscal deficit on account of structural reforms in the economy with unanticipated fiscal implications. Therefore, I have taken a deviation of 0 crore, and for the year 2020-21, it would be 5.36 lakh crores. A good part, this is very important, sir, a good part of the borrowings of the financial year 2020-21 would go towards capital expenditure. Prajanam eva bhutyartham satabyo balim agrahit. Prajanam eva bhutyartham satabyo balim agrahit. Sahasra gunam utsrashtam adatte hi rasam ravihi. Surya, the sun, and reduce litigation. Personal income tax and simplification of taxation. So in the interim budget of 2019, our government exempted individuals having income up to 5 rupees from paying any income tax. Recently, an individual pays 20% on income 5 lakh, 10 lakh, and 30% on income between 10 lakh, the prevailing matrix. Further, currently the Income Tax Act is riddled with various by the tax authorities. Reduced rate of 15% only against the current prevailing 20%. Sir, similarly, for the income between 10 lakhs to 12.5 lakhs, presently the tax is 30%. For income between 10 lakh to 12.5 lakh, the present prevailing rate is 30%. That is now being brought down to 20% only. Sir, the income between, I spoke about 10 to 12.5 lakhs. Now, 12.5 lakhs to 15 lakhs will be taxed. At the moment, tax structure will provide significant relief to the taxpayer, depending upon the exemptions claimed by him. For example, make it clear. For example, a person earning 15 lakh of rupees in a year